Jim Cramer joins me on the floor of the NYSE. Welcome back, Jim. How are you?
Thank you. Well, look, I come back and just had such a great time in Italy. A couple days in Milan. My wife test drove a fantastic Lamborghini, the one that won the Sebring in the Daytona, which is the big, long 24 and 12-hour races. And I came back with a spectacular view of Italy, but great concern about Brexit. Never thought it was. People keep bringing up Brexit as being something that is. I mean, one executive was telling me about how they felt that there wouldn't be enough food to go around in England. So I think that if we could get past Brexit, I think you'd see Europe come back. And dealt with a bunch of executives because there's just a lot more industry in Milan than people realize. And we got to get through Brexit. That's the next one. After, of course, see if we can get something to China and come back. And I've been saying that the second leg would be China. The first leg was the Fed blink. It looks better and better for China, and there's just going to be a lot of companies that anticipate that, the stocks, particularly the semiconductors, some of the industrials. Let them go higher. Try to get in one. We've been buying Lam. Do I wish people bought Micron? Well, you can't own them all. My takeaway is you can't own Xilinx and Micron and NVIDIA and AMD and Lam. You got to pick your one. We did Lam in part because the valuation was so low. But it is an exciting time in the market in that there's so many ways to win, whether it be takeovers, whether it be earnings, Carter's, Terex this morning, whether it be the Cloud Kings that are doing so well, whether it be return to growth for some companies that we felt might not, Facebook. So I see a lot to like, and I know that the prevailing zeitgeist is when we get a deal in China, that's going to be the great sell opportunity. And I say, well, wait a second, don't be so quick. Because there's a lot of stocks like Carter's that are threatening to take out, I mentioned this Carter's because they reported an unbelievable number, threatening to take out some higher prices. And Carter's is on my mind because it's apparel and the retailers report this week.
Do you listen to The Daily at all?
The Daily?
Yeah, it's a podcast from the New York Times.
I should. Jeez. I mean, I read the Times every day. What did they have to say?
So this morning, they had this, it's a 20-minute podcast, and it's great? It's great. You should listen to it. You should listen to this morning's episode, because it's about 5G and Huawei. And what the introduction of 5G means for the internet,
right.
Or the splinternet, as I just learned from Martin Bakkerdax, our London bureau chief, because they were discussing this morning the Eastern internet versus the Western internet, and how Huawei kind of plays a part in that.
Well, you know what? I think that Huawei is so controversial because, we had Mr. Herkovic, who's the guy who's on Shark Tank, and he was saying, he is a leading consultant on cybersecurity, and he said, look, I would just not advise any American company to use Huawei. But then you have a phone that a lot of people feel is a superior phone. You have equipment that a lot of people feel is superior equipment at a low price. So they're ahead on 5G. But I would point out that I don't know how much it matters right now, because there isn't much to do with 5G, but it's going to be another nail, the 50th nail in a stock that people seem to want to sell endlessly, which is Apple. There is someone who's not a seller, and that's Warren Buffett.
I'm glad that you bring up Warren Buffett, because there's a lot of news here.
He said he'd be a buyer lower, and but here's my issue with Apple. It can't get into this service stream fast enough. And I think that as long as people, there's a note today by Key, and the note is very typical. The note says, okay, it's an uninspiring video lineup, and it weighs on this, Apple weighs on the market. It was the first to go down, maybe it is the last to go up, but it is one that it is really a thumb in the eye. Amazon hasn't been able to come back. Facebook, this Mark May note I thought was very important today, very positive. The FANG stocks are terrible, and they're the Alphabet's not doing anything. People didn't like the last quarter. It's the Cloud Kings that are ramping, and the semis. And I have a piece this morning in Real Money that's going to come out. It's not out yet, talking about the semis. I got to get that off. I've been jammed because I'd spent a long time working on Kraft Heinz this weekend when I came back from Italy. But there's a lot to like.
I'm glad that you brought up your Kraft Heinz piece, because I really liked it, and I want you to explain to viewers what's going on with Kraft Heinz, and why do you think it's full of baloney?
I was going to start with my my baloney as a first name. I was going to start out that piece with through the looking glass, because through the looking glass and you see what isn't there. The management saw what wasn't there, which was they saw great sustainability, great growth. They used the 4% organic. They had the 4% somewhat organic growth, and I get that. But when you have all these tremendous things, you don't cut the dividend. And what to cut the dividend is to be able. It's even worse. They're cutting the dividend in order to be able to build a war chest to do another deal. Well, no. That strategy, 8 downgrades, people have decided that's not the strategy. They want growth. And the company doesn't have growth because of its brands. Now, you saw some actual growth, but remember, they discounted heavily, and that's one of the reasons why they missed the quarter. So there isn't, I point out that it's still a high dividend, except for that's because the stock has fallen so much. It's not a good situation.
What about the fact that Warren Buffett says that he's not going to sell Kraft Heinz shares just
Warren
yet?
Buffett doesn't, with the exception of IBM, it's some airlines a long time ago. He doesn't do a lot of selling. And if a company's buying back stock, he likes it. Now, he didn't talk that much about the cut of dividend. But I do feel that, and I know someone immediately said to me, Carl asked me, Jim, you talk about Coca-Cola not being that good, Wells not being that good, Kraft Heinz not being that good. Has this man lost his touch? And the answer is no, not at all. I mean, he likes cheap. Wells is incredibly cheap. American Express has been fabulous. Coca-Cola is a great dividend play and has been for a long time, and he believes in the power of compounding. And what's far more important is the companies she's bought have been amazing. Okay, a little bit not so great with housing, but wow, he bought Precision Cast Parts. That was really one of the last remaining aerospace companies. And he bought Burlington Northern for almost, for a song. And I would have thought he would have bought back more of his stock. But I just find that, he's struggling because of the fact that there's been no recession, so the values aren't low, except for the financials. And I think it's interesting, by the way, he's been on record buying a lot of Goldman. And Goldman is the banker on the GE deal. There's a lot of deals coming.
Which we're going to talk about in just a second.
Goldman is done going down, I believe, and represents one of the great values. And one of the values to the point where I say that even up 40 points from its bottom is still kind of interesting.
Before we talk about GE, I gotta ask, do you have any idea what kind of acquisition Berkshire Hathaway could make?
Well, you know what? I think that they need to see something to come down. I mean, look, I wish they would buy Goldman. They just go buy Goldman Sachs. It's immediately accretive, but that's not been their style to buy a big financial. But that's the cheapest stock they have.
Okay, now we got to move on to GE. What's going on there? Is this deal a good thing?
What Warren Buffett should have bought, huh? Look, this is a very important deal, particularly for Action Alerts, by the way, because we have a very big position in Danaher. Larry Culp was going to spin off the healthcare division. And I was worried that IPO would be poorly received because it's like all these IPOs GE does. They spin off something, and then it's like Baker Hughes, that Wabtec they did, Synchrony, and it's like, oh my God, it takes too long. Larry's in a hurry. So instead what he did was he sold the fastest growing part of his healthcare business to Danaher, which is got a business called Paul Corp that's very similar. Danaher accretive next year on that, why the stock's up. And then he kept back the MRI business, the slower growth, but huge cash flow that also has big service revenue. So he raised $20 billion, that plus, let's just say that plus some of the other little things he's done, and really raised a lot of cash. So it's no longer the big worry. So you take the so-called going concern worry off the table, and I think the stock's not done going higher. Now, obviously, there's a couple of big days coming up. On March 5th, you're going to have him sit down with Steve Tusa, who has been the big prosecutor of it. And again, it just shows the gutsy nature of Culp. He's willing to sit down with the guy who's been the biggest critic. And from JP Morgan, and I think that's terrific. I really like this deal for both companies.
I want to save this for Action Alerts Plus, but I got to forewarn you. I do want to ask you on Action Alerts Plus how investors can make money off of this deal. But We're going to wait for that. So before we wrap, I do have a member question, or not a member question, sorry, and Ask Cramer, because we're going to revive this. So today I have John Ventura wondering if Cardinal Health is a buy.
It's a great value play, but I don't see a catalyst to buy it. And then after the beatdown that we suffered in CVS, which, by the way, I still swear by. And we bought some at 61. I swear by it because they basically took away the downside, I think. I'm wary of that particular group. Let's understand that it probably won't go down, but I need a catalyst. And I don't like to recommend a stock on a takeover basis.
All right, guys, catch us on Action Alerts Plus, where we're going to be talking more about the Danaher GE deal. We'll see you guys tomorrow.